Welcome back, guys, to another exciting video today. I have a strong buy on Iron Mountain, or ticker symbol IRM. So let's get into it. Alright, so today we're going to be looking at the stock Iron Mountain, or IRM. Its tags are computer hardware, finance, and REIT, or REIT, which is a real estate investment trust, and we'll get into that now as well. Right off the bat, 33% of analysts are saying it's a buy, and 6,100 people on Robinhood own this. Now, at 5-year growth on its chart is showing 80% in gains, which means that you could have bought this company for literally $17.83 in January 2014. Now, it has doubled since then, with its 1 day up about 56 cents for the day. That seems about average. For the week, 2.3%. For the month, up 5.66%. So for everyone that doesn't know what Iron Mountain Inc. does, they engage in the provision of storage and information management solutions. So they have tons and tons of management resources involved. Basically, they have tons and tons of documents, including data centers and document imagery and management, secure shredding, consulting services, health information management, and stuff like that. Now, it was founded in 1951 and headquartered in Boston, Massachusetts. It has an average volume of almost 2 million. It has a dividend yield of about 6%, has a PE ratio of 43, and a market cap of almost $10 billion. Now, they also employ a little over 28,000 employees. Now, they do have some latest news, see what's going on with that if you guys want to check into that. I am not too big on actual news articles themselves. I will read them from time to time, but I do like to look at the statistics. So average price right now is 0% higher to buy, which is okay. And 33% of analysts are saying to buy, 58% are saying to hold, and 8% are saying to sell. Now, Iron Mountain operates a highly durable business model with consistent cash flow and new opportunities in areas like data centers provide a more attractive growth runway. The firm boasts an attractive dividend yield relative to other REITs, and the integration of Recall and Iron Mountain, the transformation initiative, and further maturation of certain emerging markets should drive additional revenue and margin expansion over medium term. So with that said, their earnings per share is around 56 cents per share, with an expected earnings call February 15th. Now, some other people are also interested in AT&T, Realty Income, Omega Healthcare Investors, and Verizon. But for now, let's just stick with IRM. Let's go over to the street. The street is declaring this a B buy, so in my book that is a strong buy. They have a target price of $37.62, which isn't bad because we are pretty close to that number already, about a $3 gain there. Now, some of the highlights: this has only been a buy rating since June 21st of this year, but they have also been paying a strong monthly dividend since 2011. I wanted to showcase that as well. And it's actually been increasing from 25 cents to 27 to 47 to 55 to now 61 cents per share. That's a dividend yield of 7% with annualized dividend of $2.44 off of a $34 price, guys. That is great dividend. They do pay quarterly. If we go back to the street here, so some of the recommendations and highlights for IRM, or Iron Mountain Inc. is driven by multiple strengths in multiple areas, such as revenue growth, growth in earnings per share, increase in net income, good cash flow from operations, and expanding profit margins. Now, right off the bat, some of the highlights: they have increased their revenues by 9.9% since last year, which has helped boost their earnings per share from 45 cents to 71 cents. They're also expecting an improvement from 71 cents per share versus $1.09 in the year to come. Now, the net income increased by 175% when compared to the same quarter last year, rising from $24 million to $67 million. Net operation cash flow has also increased by 16%, or by $231 million compared to the same quarter last year. Iron Mountain Inc. has also modestly surpassed the industry average cash flow growth rate of 9%. Now, the gross profit margin is rather high, currently at 58%. It has increased from the same quarter the previous year. Despite the strong result of the gross profit margin, the IRM's net profit margin is only at 6.32%, which is significantly trailing the industry's average. Now, compared to its industry peers and its group, it seems about average right now at 9% growth, 34% margin, and then their revenue growth and earnings yield compared to their peers is at 9% and earning yield is at 2.61. Now, IRM is on the top here of their peer group in the real estate investment trust sector. And here's a highlight of their statistics. Stock at a glance, as you can see here. A couple of strong ones would be its growth, 4.5 stars out of 5, and its income at 5 out of 5 stars. And their financial analysis. Their net liquidity is very weak right now with a quick ratio of a 0.84, which shows a lack of the ability to cover short-term cash needs. The company's liquidity has decreased from the same period last year, so they are getting a little bit better. At the same time, the stockholders' equity net worth has also been slightly changed, increasing by almost 4% from the same quarter last year. Guys, with that said, I do believe Iron Mountain is a good company to get involved with. I wouldn't mind owning this company and putting it in my stock portfolio, especially with a target price of around $37 and a really nice annual dividend yield, which pays quarterly. So I hope you guys like this video. Smash the like button if you did, and leave a comment below. Let me know you still like these videos, if you want me to make more of them, or if what stock you'd like me to do a video about next. Okay? Have a great day and happy trading.